Ladies and gentlemen, crypto heads around the world, the Monday Kickoff with real Daniel Nitze and Mr. Spread. Like, share, subscribe, and enjoy.
Oh yes, baby, we are live. Another Monday, another show, another Monday kickoff with me and Mr. Spread. Yeah, you can only see me now because Mr. Spread has some connection issues. But no worries, he's gonna come back, and we're gonna have a great show as always. Before we start, just hit the like button if we're watching on Twitter or if you're watching on YouTube. Of course, it helps for this content to go to as many people as we can. What we're going to cover today, we're going to cover, of course, Bitcoin. See if we're going to hold the 40,000 area, because it's very, very important for Bitcoin to hold that in order to go higher from here. I can see a little bit of selling, or as we can see, the buyers that are not that great anymore. Like the buying pressure is not that great as it was probably a week or 2 weeks ago. But we're gonna go and have a view on how Bitcoin looks in a second. I can see here Mr. Spread is back. Hey man,
hello. Yeah, good. Yeah, I was just in the backstage, and after that, I don't know, some errors, but I'm here. Hello, everybody. Very happy to be here one more time at our lovely show on the Monday Kickoff. It feels like we didn't speak for like 3 months or something, but I think it's a good idea to have them like bi-weekly. So we just have some information to gather, and because I think weekly is like a little bit too close, but I'm really happy to be here. Thank you for the invitation one more time. Daniel, how are you? How's everything going?
I'm good. I was just telling people that I see a little bit of buyers being exhausted on Bitcoin, just a little bit. So yeah, I told them that we're gonna discuss that, of course, and probably we're gonna hit a little bit on what's happening with the S&P 500, which is very, very close to an all-time high, and Nasdaq as well, even closer to an all-time high. But overall, I'm good. Yeah, it's end of the year. It was a very, very busy year, but I still have some energy, left. Still have some energy left till Christmas. Then maybe I'll be able to chill for a couple of days, and yeah, and 2024, man, 2024 is gonna be, I don't know, I feel it's gonna be a roller coaster. So I need a lot of energy. How are you? How's life? How are the charts?
Good. I was actually finishing some of my weekly reports, and I was just looking because I see already people being a little bit too frothy. Let's say like that. Like it's normal to have these kind of corrections on Bitcoin, but some of the people, I think they got a little bit too carried away. And I actually want to see this kind of corrections because if you remember, we were talking a few weeks ago that we were having like 1, 2, 3, 4, 5, 6, 7. I think there were 8 or 9 straight up weeks, and people I think got a little bit hot-headed. So I'm actually very happy to see this kind of correction. Of course, I would want to see Bitcoin staying above 38,000. But I think that the first target, it's around the 40K area, maybe a dip under 40K to 39,500 to flush a little bit of this overexposed late longs. And after that, maybe we can resume the uptrend.
Yeah, and I think we have a gap there on the CME on the daily. I think it's a gap at 39.2. I think 39.4. So I do think Bitcoin might go a little bit under 40K in the next days. But for me, it all depends what's gonna happen with the S&P 500 this week. If S&P 500 will like go towards all-time high, it's very, very hard for me to see Bitcoin like doing a very, very big dump. Even 37,000, which is not that big of a dump. But even 37,000, if S&P 500 holds and we don't see a correction there, I think it's hard for Bitcoin to really lose the 40K area. But yeah, I can see some signals there, in regards to possible local top. There are some signals there. One of the signals that I'm looking at is, of course, the meme coins. I've seen Bonk going higher and higher and higher. I think now it has a bit of correction. But what's crazy in the crypto world, a lot of things are crazy. But what's crazy right now is that the phone that Solana like built, it's sold out now. and it's sold out because the bonk airdrop that comes with the phone, it's higher in price than the phone itself. So you know,
I was actually watching. I was watching this, and I think on eBay the lowest price for a Solana phone it's around $2,500, and some of them I don't know why even reach around $6,800.
Yeah. It's the FOMO, you know. It's like, oh yeah, people want it because they're gonna buy the phone and then they're gonna have a free phone and some money, you know, on the side. And yeah, a lot of people ape in on that usually. So it's like a huge FOMO on Solana and Bonk right now. But this usually goes into that scenario, you know. We had Shiba Inu in 2021. We had Dodge in 2017 and so on. So I think, I think something is there, and I see some buyer exhaustions right now on the Bitcoin chart. Maybe we can put the Bitcoin chart so people can see. Just give me a second.
Sure.
If I can share the screen.
I will share after that. I'll share after that S&P 500 because I have it ready and I have an interesting pattern. But go ahead with the Bitcoin chart.
Perfect. Yeah. Let me see if you guys see it.
All of it.
Yeah, leave comments as well. If you're YouTube, I think YouTube is better for like comments. I can see a few comments here. Yeah, we can put them on the chat. And if you have on the screen, and if you have good questions, yeah, just ask them on the chat, and we might reply to them later on. So yeah, this is the Bitcoin chart right now. From my point of view, I'm going to delete this to be a bit clear. From my point of view, on the smaller time frames, we can see clearly here we had a top around 44.5. Then we have a lower high here in the 43.3 area, and now another lower high and another lower high. So we have a lot of lower highs, and then we have a base right now around 40,746 in this range here. Looks like a descending triangle from my point of view. If this breaks to the downside, the target should be around 37.5, which is a very important level from my point of view, and we're gonna go on the higher time frames and explain why. But yeah, on shorter time frames, maybe we're gonna have this level here around 39.4, which is the CME gap as well, and maybe we can see we can show the CME gap that I'm talking about, this one here. This is 1 hour, but you can see it on the daily as well. So you can see this gap here going to 39.3 in this range. So I think it's valid to say in my view that Bitcoin might go down from here a little bit, because I see some buyer exhaustion. And another thing that I'm looking at is right now maybe the MACD. That it's interesting because we had like green on the histogram, and now like kind of this shows to me that it might be some kind of a bar exhaustion in this area here for a small local top, but there's no confirmation yet. So we have to wait and see, but it looks like we're gonna see a dip under 40K in my view in the next days. I don't know how you look at this and what you see on the chart. Would be interesting to share your point of view right now.
If you allow me to share the chart, I can show you also my setup, my current setup.
Sure. If you put it here, I can add it to the stream.
1 second. Done.
Oh yeah. Okay. Yeah, I see it.
Perfect. So regarding this is what I was mentioning earlier, that intraday we have a sequence of high, low, lower high, and maybe we're gonna get a lower low, like I was mentioning, with a quick flush under 40K, and maybe after that we're gonna print higher. So for now, like you were mentioning, above 44K, we saw actually above 43K, we saw buyers exhaustion, and we started printing this sequence of lower highs and maybe a lower low. This is what I see right now. I have an important area right here around 40,200. So these previous lows. But by the way this is looking, and by the way we had the recent price action, I really think that there is a high possibility that we're gonna head towards something like this. And here is going to be very, very important, even a dip lower, if we're going to get to that part. However, as I'm saying, short term, this looks bearish. And invalidation above this would be a close above 43K. So if Bitcoin from here or from here or from here breaks above 43K. At that point in time, we're going to invalidate that this, and I'm not going to say daily, but maybe intraday sequence of lower highs and lower lows. However, it's something very important that I really want to note here. Although we have this on daily or even intraday, so a sequence of lower highs and lower lows, please don't take your eyes from the ball, guys, because it's very important. On weekly, actually, I wanted to show you guys something. This is very important, and I really want to mention this. Look how parabolic this chart was, right? So because of the price action which we had previously, so because of this price action, Bitcoin has a lot of downside move. So it can even drop towards, I don't know, even 31K, even towards this area, and on a higher time frame, it would still be bullish. Okay. Oh, obviously, I don't want to see it under 38 or under 34 because it's going to take a little bit more time to go towards, I don't know, 48 or 50K, maybe in the first quarter of 2024. However, please do not get shaken out right now because, in my opinion, as I have been saying for the last, since when? Since the 23rd of October, when we broke above 30K, and after that we printed the new high above 32K. So in the last, I would say, 2 months almost, we are already in an uptrend. Plus, on top of that, we have liquidity coming inside the crypto space, fresh money, like I wanted to say. As you can see here, in May 2022, we dropped under 1.32 in the total cap, and we've stayed within this range. So the money went from altcoins to Bitcoin and vice versa. We stayed all this bear market under 1.32. This all changed on the beginning of November, end of October and beginning of November, when for the first time since this bear market started, we have fresh money coming inside the crypto space. So what I want to conclude here is that although we might see something like this on weekly or even on daily, we have this sequence of, even on daily, we have this sequence of lower highs and lower lows. Although we might even drop to here or even to here, of course, I don't want to see something like this because it's going to prolong the time how much it's going to take us to go higher. Please don't be shaken out of moves like this without having any bigger confirmation. That's why it's good to have a plan. That's why it's good to break down your acquisitions on multiple acquisitions. However, we are still in a very strong bullish trend. And this is just a normal correction after 9 weeks of constant growth. So in my opinion, right now, there is no reason to be worried. And I still think that this correction is constructive. And we talked about it. Remember, we were already mentioning, you was also saying, and I was also saying last few weeks that we need these kind of corrections because in this move, even me, I was not buying any Bitcoin, right? So on this type of corrections, new buyers are going to come to the market and have the potential to fuel the next rally and the next move higher towards 48 and maybe even 50K in the first quarter of 2024.
Yeah, very well said, and I can still show something. I have something else to show on Bitcoin. And I think it's very important for people to understand now what they want, and what's their cash position and how they want to position for 2024. So, for example, if people have 100% in cash at this point, what maybe should be the zone they should look at? If people have 50% in cash, which should be the zone that they should look at? I think that's very important to look at things that way, in percentages and probabilities, and yeah, we both do that. So I think it's useful for people to understand that how would we do things, so for example, if I go back to my chart, just give me a second to add it back. So here, basically, so for someone maybe who's like 70% in cash at this point in time, from my point of view, if I would be in cash 70%, I would probably look at this area, 37 to 38,000. So this is the area that I'm looking right now, maybe to add into the market. If I'm 70%, 80% in cash and I want to add more, I think this is the area. And if I put some EMAs here, it's very interesting because I look like in these types of moves, it's like easy mode in my view. This is easy mode in my view. So this is easy mode when Bitcoin broke about the 30K level. This for me is like easy mode. What does that mean? It means that Bitcoin is in an uptrend at this point, and you don't really need much in order to position yourself. You just need to understand first what you want and like what is your risk basically that you want to have in the market right now. And you need this from my point of view. You need a 55 EMA. This is what I'm looking right now for, like a medium buy. For example, if I'm 70%, 60% in cash and I want to allocate, I'm looking at this zone, which is around 38,000 to 37,272. Usually Bitcoin, when it stays above the 21 EMA, the pink line here, and the 9 EMA, the white line here, it's usually very, very bullish, like aggressively bullish. And I know some old traders that they are using this 9 EMA as something that they look at very, very bullish, like extremely bullish. The trend is bullish once you are above. Once you break below, the trend is kind of exhausted at this point, and then the confirmation will come after you close under the 21 EMA, which we're kind of doing right now. So this shows me that the trend is exhausted at this point on a daily time frame. We're going to go on weekly in a second, and which means that we might have some kind of a correction down to the 55, which is like the 38,000. And if I'm 70% in cash right now, which I'm not, of course, at this point, but if I were 70% in cash, this would be my target, to buy some Bitcoin, maybe 5%, maybe 10%, not all in. Like I'm not liking that being a gambler, in the market. And then after that, I'll probably have a target down to these areas here. Of course, there's one at 35,000 to take into consideration, and then 31 to 30, maybe a little bit down below. And you see the 200 moving average that is coming right now on the daily at 30K, around 30K at this point. On the weekly time frame, it's even easier. If you said something very, very good there. If you look at the daily, you're gonna see, yeah, we're gonna have a correction. The trend is maybe breaking at this point, but on the weekly time frame, we did not touch the 9 EMA, which is at 38,000. So a lot of confluence in my view, 38,000 at this point. We can go back in time and see how Bitcoin reacted in 2019 on the 9 EMA. So it just went 9 EMA, like based on this, even here. And then once it broke it, yeah, then we had the small downtrend for a couple of months, Or here, if you look at the 2021, you can see the 9 EMA 21. And here as well, we came very, very close to the 9, and then we bounced, similar here, and then we bounced again. Yeah, usually in a bull market, 9 EMA, it's a decent buy, I would say. If you're in cash, I would say 70%. If not, if you're in cash, for example, only 40% or 30%, I will aim for this area, which is 34,000, and then this area, which is very, very important, the 55 EMA, which right now it comes to 30K, a little bit down 30K. Why? Because if we can see here, once Bitcoin is breaking below the 9 and 21, usually it bases on the 55 on the weekly time frame. So that's why for me right now, which I'm about 65% in the market, I'm interested more in this 34 and this one right now, 30. But for people who are like 70%, they might be interested in this area here, 37 to 38, because Bitcoin might do this, might come based on this, and then go higher, from this area, which it kind of did in the past cycle of bull market, as we can see here. This one was very aggressive, or here as well. This one was a little bit less aggressive because we were like coming out of the bear market. This one is similar in my view with what's happening here. Is like, I don't think we're in this scenario yet. But yeah, this is how I look at markets. Do you look differently? Like, what would you say to someone who is like 70% in cash right now, Mr. Spread?
70% in cash. It depends what he has. On the other 30%, he has Bitcoin heavy. What does he have?
Yeah, for example, he's like 70% in cash, and he only wants to buy Bitcoin or crypto. What would be his scenario at this point? Like what area he should look at right now, like from your point of view, and you can
the first area. No, it's fine. It's fine. The first area is 40,200, the one that I just mentioned earlier. And if we still hold here, I will still allocate. And the next one would be 38 and 34. But like I said, all the way down towards 32, any pullback is just a discounting price for next maybe 16 to 18 months, in my opinion.
I agree. Usually when Bitcoin is in an uptrend, stays in an uptrend, you know? When it's in a downtrend, it stays in a downtrend for a while. So for now, we are in an uptrend, but it's not unlikely for Bitcoin to go down for a couple of months. Like, it can happen. It can go down for 3-6 months. Like, it can go down at the beginning of 2024. Yeah, like 2023 was kind of up only if you look at it this way, you know, like we had some small dips here, but if you take it from here, it's was kind of up. Yeah, how much was 184%. So we're kind of going up in 2023. Usually after a year like this, we usually go up in the first half, and in the second half we go down, or vice versa, you know. Usually for Bitcoin, the only area when Bitcoin was different and reacted differently was here in 2016-17. Like this one, we came out of the bear market in 2015, and then we went higher, and then 2016 we had a very, very good year, and then 2017 was a blow off top. But I'm not sure if we're in that scenario. We might actually be in some kind of a 2019 scenario at this point in time, in my view, for BTC. So yeah, I think every pullback here can be an opportunity. Both me and Mr. Spread said what areas we're looking right now. I think for me, I think the probability is higher at this point for Bitcoin to break 40K and base around 37, 38 in the next days, but depends on the stock market as well, and what's gonna happen there. Do you wanna do an overview of the S&P 500, Mr. Spread?
Yes, because it was something very important, which I had and also posted on Twitter, and it's actually something very interesting. If you can put me on stage.
Yeah.
Perfect. So like I was saying on Twitter, and because I didn't want to be biased, I was just watching this, and I was like, what if this is a potential bull flag, like a huge, massive bull flag, right? And if we go back, we had something like this, okay? And this is where we were in the beginning of December. So we were under 4,600, which was the high of this year. And also, as you can see, it was also the high before March 2022 drop. And I was like, what if this is a big bull flag? And I got some eyebrows and I got some questions on that thread on Twitter and also on private chat, because people were asking me, okay, so under 4,420 you're bearish, and now you're so bullish that you think that we can hit a new all-time high. And I was like, guys, you know what? This is price action. This is not necessarily my opinion. This is what I see in the price. Of course, I can be wrong, but if this what the price is telling me, and if you remember, we were talking about this. We had the high, lower high, we had the high, a low, a lower high, lower low, lower high, lower low. And when we broke above this, I just said that I want to take out this area. So when we had this bearish sequence, I was bearish. But when the price went above 4,420, if you remember, I was like, I just need to see the price higher than this. And more than that, we took out also the highs from here. So there is no reason, in my opinion, right now, if you're unbiased, to still be bearish on S&P 500. So after I drew this last week, this is what followed. Let me put it on 3x. And when I said that the next target it's around 4,855, it seemed a little bit crazy given the current context, but it's not so crazy right now, because this is the potential measure target of this massive, I would say even weekly, but let's call it multi-daily bull flag. So the all-time high it's around 4,824, and if this is gonna print a little bit higher and may print a new all-time high, it's gonna be around 4,855. Since then, so we just rallied another 3%, and we are about 1.95%, if I remember correctly. Yeah, around 1.95% away from an all-time high. And from there, I think it's just a matter of time until we hit this. Even if we don't hit this, just because I had this bull flag, and I followed this bull flag above 4,600, in my opinion, gives me a nice perspective. And as long as we're going to stay above 4,600, so if we get a pullback, or even if we get a pullback like this, in my opinion, it's a good opportunity for buying. What I don't want to see, short to medium term, I don't want to see S&P 500 dipping under 4,420. So if by any chance we do something like this, at this point in time, I'm going to reevaluate my short to medium term thesis. I'm going to be very, very conservative, because we're going to have other areas open up again, maybe 4,200, and maybe the lows from 4,100. So right now, like I said, we have a big uptrend. The all-time high, it's like in the reach. And I think, let me double check what we have this week, because I know that we have some important data. We might have it on Wednesday night, when People's Bank of China is going to introduce more likely more liquidity, or we're going to have it on Friday when we have the core PC from United States. So I really think that the all-time high is going to be tapped most likely this week, and maybe even the new highs, the projected target which we have around this area. But like I said, a pullback here, it's for buying, and another here, it's still for buying. As long as we stay above 4,420, I'm going to be bullish on the S&P 500.
Yeah, I can see here a very good question from Alexandro, who he said, "What if it's a cup and handle?" I think he was asking mainly you, but what do you think? Does it look like a cup and handle?
Yeah, actually, I had a huge cup and handle which I posted in one of the evenings. One of the guys mentioned this to me. Let me see if this was the. Yeah, so I don't remember. It was something like this,
Yeah,
Look at this.
Yeah. It does look like it, but the target is like monster, right? if you do
wait just 1 second, because I want to show you something.
Okay.
Because it was here, and I had the accurate target on it.
Yeah,
and I raised a lot of eyebrows. I raised a lot of eyebrows with that target. But that's just a potential target. You have to understand that, price action is price action, and these patterns more often than not they fail. But this is what we had on here.
Yeah, I'm just gonna add it in a second. Yeah.
So it's an amazing cup and handle. If you look at it, I was even more Catholic than the Pope, so I didn't want to put the. No. This is what I shared. Sorry, I wanted to share the other screen.
Okay. Yeah. No problem.
This is what I wanted.
Very, very big question for you.
Look at this. Look at this. Okay. Yeah. So I also put like another cup and handle, like a default pattern, so we can watch how similar they look. And look at the target; it's like 47% high, it's like 22,579 if you measure it, right? So like I said, I was even more Catholic than the Pope. I didn't want to measure it up until here. I just said that this is the neckline, but we already have a new all-time high above 16,600, if I remember correctly. And look what kind of. So this is the measure target. You take it from the bottom until the neckline. And from the breakout, you just measure. It's absolutely crazy. So yeah. Alexandro saw interesting cup and handle, and I think you can have this cup and handle also very nicely on S&P 500 if I look in more details.
Yeah.
Go on with the question.
Yeah, the question now, like the probability of this like going higher and be sustainable, and the probability of doing a 2008 scenario in which we touch all-time high and then a recession is coming. That's the question. What's the probability for this to go higher?
Nobody.
What's different now?
Nobody.
What's the same now? That's the question in regards to 2008.
I don't think that nobody can have a straight answer to this, because we are in a totally different scenario.
Straight, no, but probabilities wise, like that's the question.
I don't have any probability here. There are too many things that can happen, both on the good side and both on the bad side, in order to have any type of probabilities. I just saw a pattern. Actually, someone else from my community saw this pattern, and I just want to lay it out there because it's very valid when you look at it, at least technically. More than this, I think that, and I said also to other people, I think that too much macro can really affect your analysis, because macro, you can be right on macro for years, right? I mean, you can be right, but you can stay on the sidelines. Imagine we were speaking about Michael Burry. He was shorting the real estate market since 2005, and he was right only in 2008. And since then, he missed what type of a rally on S&P 500, and almost he got liquidated. So that's why I was always mentioning that macro is part of my framework, about 10 to 15% maximum. And besides that, I mean, the main driver for my allocation and for the way I invest and trade is liquidity. And as we saw earlier, liquidity came back inside the markets. So when it comes to probabilities, it's not my style to give out this kind of probabilities.
No, I totally understand, but I think we need to discuss what's similar and what's not similar. For example, what's similar in regards to maybe having like a pullback after all-time high is that in 2017 we had inflation that was on the table as well, and we had interest rates that were not that high but were still higher, and then we had a cut. We can talk about what Jerome Powell said last week, basically, and he was asked a very, very good question, and of course he did not really answer. It was like I think he said it as well. Depends why we cut interest rates in 2024. You know, like why is the Fed gonna cut rates? Because now they're gonna have at least 3 cuts of rates, maybe around 0.75% in 2024. The question is, and Jerome Powell said the same, like he doesn't know yet, why are they gonna cut rates? You know, are they gonna cut because the recession is coming, or are they gonna cut because we're gonna have like a soft landing scenario? You know, and Jerome Powell was very dovish actually, and I think he's leaning now for like some kind of a soft landing at this point. But the question is, why is he gonna cut? Because in 2017 they cut because they saw a recession coming. And then, of course, they pushed the recession because after they cut, we all know what happened. Then the inflation was still on the table back then, and then it went under control. And this is kind of similar from my point of view. They printed some money. The only thing I see a bit different is maybe the labor market, which is very strong at this point. And I think last time when the S&P 500 did all-time high in 2007, 2008, it was after 7 years. So 7 years going sideways. I think you can put it there on the chart. The 2008. I think you have it. If you have the S&P 500, that would be great. But I think in 2007, the last all-time high was the dot-com bubble, right?
Something. I remember it. Something very similar.
It was 7 years. Now you have only 1 year. You know, that's the problem that I have with that scenario, that the stock market after all-time high is gonna crash similar to 2017. Even though there are some similarities on the table that we cannot ignore. Like we cannot ignore that in my view.
It's not this one. I need SPX.
Yeah, SPX. I think SPX is better. You have more data on it. But yeah, I think that's the question. Of course, no one knows, but we can look and see what is similar and what is not similar. That's the question. What is similar, what is not similar for it. So yeah, you have there. What is that? It's 2000. It's 2000, right? Yeah.
So about 2,772 days until a new all-time high.
Yeah, so basically 7 years. So 7 years going like down and sideways, and this probably will happen to Bitcoin at some point in the future. Just FYI, most likely.
It might.
Yeah. But yeah, after 7 years, the S&P 500, everyone was cheering that it's doing an all-time high, and then and then that happened. You know, that was a very, very big pain. But it was coming probably from 7 years sideways, interest rates, and so on. Now it's like 1 year, but maybe now it's faster, you know, because they printed more money or so on. And another thing that I think Jerome Powell said last week was the lag. It's not there yet, and it's very interesting. It's still missing. You know, they don't see the effects on the economy. So that's something to keep in mind. And he said they're not really out of the woods yet, even though he was leaning a little bit dovish. A lot of people speculated that he's doing it for the Biden administration. because the S&P 500 needs to go up before election year. But yeah, that's just a speculation. But out of the sudden, he was like kind of dovish. How did you see Jerome Powell? Did you look at
very dovish? Yeah, very dovish. And this is the reason why, and we're going to mention this very, very soon. This is the reason why right now I think that the dollar is bearish and is going to continue bearish, because right after the next day we had Bailey from Bank of England, we had Christine Lagarde from European Central Bank. So these two, with the euro very, very bullish against the dollar short medium term, and the pound very bullish against the dollar short medium term, plus the USD JPY, we have more than 80% out of the DXY basket, which puts pressure on the dollar. And if you look at USD CAD, so the United States dollar with the Canadian dollar, it's also very bearish. So around 90% out of, maybe even more, 96% USD CHF is bearish for years now. So more than 90-something% out of the DXY basket is pushing now down on the dollar. That's why I still think that this is a whole thesis. When I was saying in the beginning of this Monday kickoff that I think, at least short to medium term, I don't know what's going to happen in 1 year and something from now, but short to medium term, I really think that pullbacks are for buying, because I still see a lot of sideline people. I still see a lot of people with PTSD. At every small pullback, people are getting a little bit frothy, they're getting anxious, etc. And they're still thinking that something can break. And I don't disagree with this. Yes, something can break, but what if something breaks in 2025? What if something breaks in the first quarter of 2025 and 2024? We're still gonna grind up like slowly. Liquidity we have liquidity from People Bank of China. We have liquidity still from Japan. What if 2024 is not gonna be the recession that everybody's waiting for, and they're gonna cut just because they had inflation under control? I'm not saying about the soft landing necessarily.
Yeah, well, that's a soft landing.
Well, it's a soft landing for 2024, but maybe a big recession comes in 2025. So I'm not excluding this. I'm just saying that maybe this lag effect that Paolo was just mentioning right now is gonna lag until 2025. So this is what I'm saying. Because
the question is, why is the lag taking so long?
I can tell you why is the lag. Because since 2008 they printed large quantities of money, so they ballooned the monetary base, not only in the United States, but especially in the United States, but also from China, Japan, Bank of England, Royal Bank of New Zealand, Royal Bank of Australia, all the big banks in the world, and also the smaller banks. They printed large quantities of money and they inflated the money supply, the global money supply. And big corporations and banks, etc., even small businesses and people had then, and since then they had resources. And stash, for example, and they had stash, and this happened until 2022, because after 2022, whatever they did between 2008 and 2022, after 2022 COVID crash, when we had the V-shaped recovery, they just quadrupled that amount of money. I mean, they just did bazooka monetary policy. I think they got really scared and they just overdid it. So this kind of extra war chest and this kind of extra capital that is still inside the markets right now, although they did more than 1 trillion in quantitative tightening, it's still pushing on the lag effect. So the lag effect can be longer. That's why I was mentioning Buddy. The lag effect can be longer than most of the people can stay liquid. So this is also one of the reasons why I'm mentioning to people that if you didn't have any allocations until now, you have to break this kind of bear market mentality and bear market PTSD, because we have new money coming inside the crypto space. And not only in the crypto space, I also see the global money supply going higher. What I have here is for 931 days, so since since May, around this time, maybe around this time, somewhere around here, until the all-time high. Imagine that Buddy was shorting the market. So he was shorting for 930 something days, time in which S&P 500 went higher with about 40%, and after that dropped. So just keep this in mind.
He was right in the end, though. He could have shorted way worse, from 2001, 2, 4, whatever, 3.
Well, this is when he discovered. This is when he discovered that there are some problems with the housing market in the United States, and this is what was happening. And only after that it was the drop, and he made a lot of money. But come on, let's face it, and let's not bullshit ourselves. We are not Michael Burry. We are not hedge funds,
no.
and we cannot have this kind of amount of cash at our disposal to stay be against the trend or the higher time frame trend and against the market for years and years to come. What can we do is just follow the money, follow the price, follow the market structure and the bigger, higher time frames in order to position ourselves. It's never going to be a perfect time to enter the market. But like you were saying when we were above 25 and I was saying above 30K, for me, above 30K, it was a clear indication that Bitcoin broke a big downtrend structure. And above 32, it was done. I mean, anybody who was still bearish above 32K was super biased. That's why right now what I'm saying is that if we're going to hold above 32K, any pullback is for buying going forward.
Okay, yeah, I have another thing on Bitcoin. Maybe we can discuss what's happening if Bitcoin will go to all-time high from here. That's a question. And the second one is here on the screen. Soft landing or the recession? It's gonna coming to hit hard. My answer: soft landing, and the recession is gonna hit hard. That's my answer. I think Jerome Powell is gonna do a soft landing, and then a very, very big recession is gonna hit because of the economic lag. Probably 2026. I would say
it's very possible also like this. It's very possible like this. But imagine,
so. Like,
imagine how many people are gonna be off guard.
Yeah, the probability is that right now. Like I'm leaning towards that probability, that first soft landing, maybe the crypto cycle to play similar, and then a very, very nasty, not the biggest one, but nasty probably because of the lag. You know, the longer the lag is there, the harder, in my view, the recession will be. Correct me if I'm wrong.
No, you're right.
Yeah. So another thing, let's look at what's similar. Another thing that's similar is the VIX. The VIX is like, again, very, very low, similar with 2007. If you have the chart of VIX, I can add it. If you have it somewhere, I can add you on the screen. I can see your Bitcoin right now. We'll come to Bitcoin in a second. Yeah, Cosmin has something very nice to say. You guys are the most informative people on X and YouTube. Congrats. Thanks. That's why we're like doing this.
Thank you very much, Cosmin. We are very happy you guys like it.
Yeah, and if you like it, you have the like button. You can help the channel grow, and of course subscribe if you didn't do that.
By the way, I don't think, in my opinion at least, I don't think that on a technical analysis on VIX is worth it. These are just some levels. So these are just some levels that we just watch. So just to clarify some things, because maybe people will say that we're doing technical analysis on VIX and that's bullshit. But go on. We have some similarities.
Yeah, as you can see there, 2007. I think you need to go a bit back. 2007. It's interesting to see.
So I need another type of VIX.
You need another VIX. I think maybe that one can be interesting.
Yeah, this is the one.
Yeah. So it's kind of there in my view. We had the 2017, and then if you go back, there. Yeah, that it's kind of there, but it's something similar. It doesn't mean that right now it's gonna happen the same, but it's another thing that's similar. The VIX is very low for a while, as it was towards 2002, 2007, and now it's low again here, 2022, 2023. Like the most part of 2023 was kind of low, so I think this might signal some pain in my view. So I think that's the similarity that I'm seeing right now. And of course, the Ben Bernanke versus Jerome Powell, which Ben Bernanke said that they're going to have a soft landing. Now Jerome Powell is leaning towards that as well. Now he's becoming dovish out of the sudden, probably because the U.S. elections next year. But yeah, that's the similarity. What's the difference? What differences do you see? Do you see any difference?
Yeah, the problem is that I don't have enough information regarding this, but there is a process that is called the VIX crush. So they're just crushing the VIX with some mechanisms, and I'm not gonna sit here and tell you that I know in depth how they do that. I think Bargali had more information on this. Not I think, most likely that he had more information on this. But because they are suppressing VIX with those mechanisms, and when it's, like I said, it's called a VIX crash, I would not be surprised that in the next few months who knows? Maybe until July, August, September, we can see the VIX going towards 10, maybe even lower towards 9, and after that started reaping towards the beginning of 2025 and towards 2025 to have some similar moves like we had back in 2008 and 2020. But until now, I don't see demand on VIX. I see that every time when VIX tried to pop up a little bit, they just crushed it. So when VIX is doing like this is like inversely correlated with S&P 500.
Yeah, I agree. Another thing that baffles me, maybe you have an answer. It's the bond yields.
Sure.
Mr. Spread. Yeah, because I think we broke 4% of the 10-year yield bond.
Right.
Usually, correct me if I'm wrong, maybe you have more history in the financial, like traditional markets. Usually when the bonds yields are correcting, usually it drags down the S&P 500. Isn't that right? Like most of the
in a lot of times. In a lot of times.
Yeah.
True. In a lot of times that would happen. However, right now that correlation is not 100%, and that correlation is not applying immediately, right? So we can still have the bond yields going much lower, and until we will see that people will be interested in bonds right now. But for now, they're not interested in bonds. They're not.
Okay, and why is the bonds like falling? If you have the 10-year, maybe you can pull it up.
Sure.
Why are the bonds falling? Because bonds yields, so people can understand. Because we usually, when the bond yields are falling, there is demand, right? For that, because that's how the bond yields are falling.
Yeah, they're inversely correlated to the price of bonds.
Yeah, so it means that maybe some investors are like positioning themselves into bonds, or not really, not exactly. Maybe yes, maybe no, or because
I didn't check the 10-year for quite some time, and I think that they're at a very important level, which is this 3.9. And under this, let me double check.
If you can share, would be perfect.
So they're here at 3.9, and after this, we can see another big drop on the bond yields. However, like I said, we have a very weird macro context right now with what's happening and what happened also with the AI mania in the spring. If you remember, we had those big problems with First Republic Bank, and we had the problem with Silicon Valley Bank. And when those problems hit, United States government, and also the Fed, not also, but through Federal Reserve, they helped a lot of big banks and also regional banks. And because they installed that program of BTFP, they reinstalled that program and also the discount window, banks didn't suffer so much. And we've seen that the BTFP program is actually driving, it's rising, which means that banks are tapping into those funds. So this is something else that I've been listening to what Joe Carlasar was talking in the Because Bitcoin spaces, and other people, because I watch and I listened quite to a lot of spaces, and I was also seeing Concoda was mentioning this. Right now, it's a very, very weird type of situation where we find ourselves, where everybody's waiting for something to break, but something might take more time than people are actually being ready for it to break. I have to admit that I was also actually did something break. I was waiting for something to break in 2023, and something broke when we had the Silicon Valley Bank, the First Republic. So, but that was very contained, and the Federal Reserve stepped up, and they did something that it's something like a stealth quantitative easing, if you can say it like that, through the BTFP program, which is a program where banks can tap in when they have these kind of issues. And more banks, because of high interest rates, tapped into that program, which resulted in a much more stable financial condition, which resulted in much more stable financial conditions across the markets. On top of that, if you remember, Biden was in China. Janet Yellen was in China, and Xi was in the United States recently. He was in San Francisco. And I think that they discussed a lot the current market conditions, and without Federal Reserve doing and improving the liquidity in the global markets, China stepped in, and this is what they were doing. They improved the conditions through their big quantitative easing. So they did the injections of capital, which still support the markets. So although the Federal Reserve was reducing their balance sheet and they were withdrawing liquidity from the markets, because China and also Japan were still doing quantitative easing, and they are the second and the third biggest banks in the world, the financial conditions and the liquidity conditions in the global markets / risk assets were still stable and fueled risk assets to rally higher in the last few months.
Yeah. It's clear, but we have a very, very good question here. If you were a hedge fund, will you take 5% from bonds or take risk when S&P is 3% away from all-time high? So I think what he's trying to ask is that at this point in time, would you take risk off the table and put it in bonds, as maybe we can see some investors doing right now?
I don't see investors doing that right now.
Okay, so you don't see hedge
no, look
funds
at this
doing that right now.
I mean, maybe they are doing at some degree, and I'm not disputing.
Yeah, we can see it in the yield. So
yeah, we can see it in the yield. So people, maybe they are also allocating to the bonds, which makes sense to protect or to hedge or to have some. Most of the big hedge funds also hold a large portion of their funds in bonds. But in the same time, we can see that S&P 500 is still rallying, and it should rally because of the metrics which I just mentioned earlier. The rally, I really think that this rally was fueled mainly because Federal Reserve resumed the BTFP program, which helps distressed banks. So other banks were not falling like First Republic or Silicon Valley or the others which have
they
problems.
should have all of them, right? But they were saved again.
Yes.
Yeah, the same mentality, I guess.
But besides that, like I said, I think there were some behind closed doors meetings with high officials, like Yellen went to Xi in China, to Beijing, and Xi came to Biden here in San Francisco in the United States. And because of all these reasons, and we saw that People Bank of China had massive injections of liquidity since spring, plus Japan did the same things. So looking back, I still think that this year the money supply grew, even with Federal Reserve withdrawing massive quantities of dollars from the markets. So all in all, I think it's net positive on the global liquidity, which again, liquidity is the main driver of all assets in the world. Less liquidity means most likely a drop in risk assets. More liquidity means a rally, as we can see in S&P 500, as we saw a new all-time high in Nasdaq, as we saw Bitcoin rallying. So to answer Sergio, if I was a hedge fund, I should have been already allocated until now, also to bonds and also to S&P 500. If I would not have any allocation to S&P 500, I should quit and grow and do, I don't know, farming and raise chicken.
But I think that's what's fueling the end of the year rally, because a lot of hedge funds were not really positioned that much, in the S&P 500.
It's very true. It's very true.
And at the end, they need to show something. It's that part. They need to show something to the investors, like, yeah, we did not hold cash only. Look, we have some allocation now, more in the S&P 500, and so on. And it is another factor to remember. The hedge funds that were very good positions, the VC funds that were very good positions in 2023, they might sell a little bit towards the end of the year, in my view.
I don't think so. If you remember what we
to show that they have a good track record. No, you don't think?
Let me tell you why I don't think so. I don't remember if I said it in the last Monday kickoff regarding
Maybe.
Max from because Bitcoin with his theory, why he has a theory why risk assets will not fall so much before the first quarter of 2024. Imagine all the people who bought in these areas, right? In these areas are in profit right now, right?
Yes.
Even on this drop, right? On the latest drop. Yeah. So if they will sell before January 1st, for all the gains that they made here, they have to pay taxes from January 1st until 2025 December, right? So most of the people, and I also think that hedge funds will not do this. so they can prolong this, so they can close it. They can close this in January, and after
the beginning of the year.
Yeah, exactly. So they can close it in January. So if we're gonna see that, and if you think about it, that makes a lot of sense, because also in 2021 we had a big correction in Bitcoin in January. So maybe we're gonna still have a rally for January and maybe even for February in risk assets. We're gonna print that new all-time high, and after that, towards February, we're gonna see a deeper collection, and maybe after that we're gonna have another rally in next year, which is gonna coincide with the same thing on Bitcoin. Let me open here Bitcoin so I then switch the charts.
Yeah, we have Pargali on the chat, and he said something interesting.
Go on until I open the chat.
He said rate cuts get priced in, yields will disinvert, and markets go down as more rate cuts get priced in. If rate cuts get priced out, markets go up as yields will invert, which is the new game for 2024. Interesting. Yeah, interesting scenario. So rate cuts get priced in, yields will disinvert, and market, okay. So yields will disinvert means that the 10 and the 2 will go positive again, right?
Yes, this is what he means.
Mm-hmm.
So okay, go on with what he was saying.
As more rate cuts gets priced in. Correct. I think so. That should be the scenario. If rate cuts get priced out, markets go up as yields will invert. Okay. Yeah, I don't really understand that last part that well. If rate cuts get priced out, markets go up as yields will invert.
If rate Yes, yeah, because if there are no rate cuts, the markets will go back up as yields will still fall.
Okay, yeah, makes sense now. Makes sense. Yeah, might be. Thanks, Pargali, for this comment.
On the chart, most likely the same thing. Imagine people who bought all the way down, so they are in a very good profit on Bitcoin, right? And they bought on all this mega rally for more than 180%. Why would they sell now instead of just waiting for January? And for the tax purposes, and imagine some huge gains that they have.
Yeah, and they're gonna pay. They will still pay,
but it's another thing. You don't have to pay, like, because in the United States is between 30 to 40%. Yeah. Imagine paying now that 30 to 40%, when that 30 to 40% you can still keep throughout 2024, and you're gonna have you're gonna have a bigger chunk of money to invest throughout 2024. Instead, let's say you made on this rally $100,000 profit, right? Let's say from here to here. Would you feel so good in paying 40% and just having at the beginning of the year with 40% less? Or you would not sell here because most likely we're not going to have such a big drop until January 1st, and you're going to enter the new year with $100,000, which you can much easier send to higher values
and pay next year. Yeah,
exactly. Okay. So instead of closing your profits, which you made in 2023, up until here and go even 30%, let's say we have to pay 30%, I would close some of the profits around here, and those 30,000 that I would pay, I would invest in some shitcoins. I don't know, I invest in some altcoins throughout 2024 and put that money to work so I can multiply my profits, and maybe I do the same thing and I pay just some of the profits here in 2025, and I rinse and repeat.
Mm-hmm. It's clear. Yeah, I think you're right there. We saw that in 2017-18.
It's not my theory. This belongs to Max, so I don't want to take.
Yeah, it is true. It is true. Like, it makes sense. I think we saw that 2017-18 for Bitcoin as well. Once we topped, it was December, but then the altcoin still pumped beginning of January, like for a few weeks basically, and then we had like the top for the market, and then the bear market started. So it might be some kind of that scenario. It doesn't mean that the bear market starts now. It means that correction is due, maybe January, February. Like I think we talked last time. I think till February probably Bitcoin will print a local top in my view, and then we're probably gonna go sideways down. That's
very possible. Very possible. Yeah. The only thing is that people are not so much willing. The difference between the other cycles and the other beginning of the years from other periods of time is that people are not so willing to sell their Bitcoin before an ETF approval, which might come in the first part of January. So I don't see such a big sell pressure. Yes, we can have a correction, but people are really holding into their Bitcoin right now. I mean, I saw with how fierce they bought all these kind of dips, and they're buying even now.
Yeah, we have a very good question here, which goes to my scenario. I mean, if Bitcoin go higher, it will be very interesting narrative that right now not many people talk about it. So the narrative that I want to like scenario, not really narrative, is what happens if Bitcoin goes to an all-time high from here with no pullbacks.
But
So,
this is
for
what I'm
example,
saying. This is what I'm saying. People don't want to sell their Bitcoin here, so don't be so bearish. Even if we get a pullback, that's why I put the higher time frame. And I was like, guys, even if you get a pullback, as long as we stay here, dips are for buying, and that's true. You and also Andre make a very good point. And I don't think that a lot of people are, and I really think that the pain trade is not lower. I think that the pain trade is much higher from here. I think that a lot of people are going to be sidelined if we rip to. I don't think it's going to go directly to all-time high.
yep.
But if we have this type of pullback and we go something like this, a lot of people are not going to be prepared for this type of move.
Yeah, I agree. But what happened with the cycle if Bitcoin will go to all-time high before halving, for example? So, for example, we are now at Bitcoin 40,000, and in
Right.
March is 69, yeah, 70K, or let's say 75 or whatever. What's going to happen with the cycle at that point? Because in my view is if we go to all-time high from here with no pullback or sideways for a couple of months, I think it's not sustainable in my view, and I think we might not reach over 100K. That's basically that's basically why.
All models work until they don't work, Daniel. You know,
Yeah,
all
yeah, but
models, all models are the same. So
that's how that's how I picture it. If no pullback, if no pullback or sideways, I don't mind Bitcoin to go 38 to 42 for 6 months. Like, I would not mind. I will find it healthy in my view to do that. I will find it very unhealthy to go from here to all-time high. If it
would
does
you like
that,
something like this?
something like that, yeah. So that would be healthy. If we go straight from here to all-time high with no kind of a pullback, I think that would be a fake all-time high, and then we're gonna crash and do a bear market again. Yep, a bear market for 1 to 2 years again. That's how I see it. Exactly like that. Exactly like that. So
Makes
probably
sense.
if we're not gonna stay a couple of months sideways and we're gonna go to some kind of a blow off top, I think I'm gonna sell some. I already sold at 43.2, but probably I'm gonna sell more above all-time high immediately after we touch all-time high, because I think it's not gonna be sustainable looking at the past. So I don't really want that. I want like sideways as 6 months at least in 2024. I don't mind to be the second or the first half of 2024. I don't care. And then I want to see that till 2026. And then if I see all-time high coming end of 2024, beginning of 2025, then we can play the game of Bitcoin going to 200K and more. But if I don't see that, probably Bitcoin is going to have a shorter cycle, and then a bear market again, like faster. Like, it's going to play the
So wait
cycle
a
fast.
second. So wait a second. If it goes to like this, you're
Yeah.
expecting the cycle to be different. But
Yes.
but if it goes uh,
Sideways or
sideways.
correction, yeah, I'm expecting the cycle to be the same.
Okay.
Yeah,
I
so
was just confirming. Yeah.
that's what it is. So I'm gonna adjust to that. If Bitcoin will like go before the halving to all-time high, in my view, it's not gonna be sustainable, which means that probably I'm gonna sell some, and probably we're gonna go into a bear market again afterwards.
So it
That's
means
like
it would mean in that condition that also the cycle would not be the same like before.
No, exactly. The cycle will not be the same. Will be
Okay.
different this time. I know, but at this point in time, I'm not seeing it different. But if that will happen, yes, will be different. So if
I want
that will happen, it will be different. I don't want an all-time high before the halving. In that scenario, like in that scenario with the blow off, I want it after, and I want it with a pullback. So people again will forget about Bitcoin, and we're gonna go through summer with like no volume and so on. That's what I want basically. And then of course the ETF, which is gonna be approved, might be approved in January, to have some time to adjust. In the market, and to have some investors and so on.
This is the halving here.
And liquidity. Yeah, that's the halving. Someone in April. So yeah, I don't want an all-time high till then. I can go 50K like before. I don't mind. 50K, 55K, I don't care. But not all-time high. Like not all-time high. If it goes all-time high, it's gonna be a parabolic blow off top again. So, and the crash is gonna be even bigger probably. And then
it's gonna be very interesting. It's gonna be very interesting. What's gonna happen here.
Then you're gonna get into the scenario with Wyckoff distribution again with the third top for BTC a bit higher, 80K. And then another 2 years or 1 year, 2 years of a bear market.
Very interesting times going forward.
Yeah, I agree. And probably we're gonna be here.
Most likely, I hope we're gonna be here.
Yeah, and look at these scenarios. But what do you guys think on the chat?
I have something until they share their thoughts on the chat. I have an idea of something that I was looking at, and this was a very nice trade which I had in the past. But I had this trade in the past because look what's happening. This is Pulte Group or PHM. They are the third largest residential home builders in the United States, right? So for me, this was distribution. Actually, I was watching it on daily, and I shorted Pulte. Rarely I short some stocks, but I was watching at the home builders back in August, and for me this looked like a distribution. It already came after, and I have this trade recorded on Twitter, especially after this massive rally which had from the bottoms in March. It rallied about 65%, and for me this looked like distribution because it was not able to print new highs. So what happened after? I pulled the trigger here, and here the trade was closed. I followed on it, and I said, I'm not going to short this stock again because let me tell you, I was emotional from one perspective. I really like how the CEO of Pulte Group is managing things. And I was like, you know what? I have so many other assets that I can short. I really like that guy. And I really like how he's managing the company and how he talks with investors and also with the people for who he's building houses and homes. And I'm not going to short the stock anymore, but I was watching the stock. So what did happen to it? It actually went much lower, but this is something that I want to bring into everybody's attention. You inclusive, you included Daniel. So let me show you what happened to Pulte since then.
Oh wow!
So this is remember this is the third biggest home builder in the United States. The third biggest. So this is not a small company. This is not some type of mom and dad rental stuff. And this went parabolic. Well, this tells me that the housing market in the United States does not have so big problems right now.
It's strong, yeah.
It's very strong. When I see something like this, I mean, I think, yeah, this is look at this chart on weekly. Just look at this chart on weekly.
Small pullback, like it was a bull flag, and then.
Yep. And I think that we can see even something like this and like this even. Even if we have this drop in Pulte, as long as it stays above 85 areas above where it was the previous all-time high, Pulte is good. And I really think that for 2024, home builders in United States can be some interesting allocation. And I'm looking into these home builders like Pulte Group and maybe some of the others. But this is on the narrative of a potential soft landing, like you were mentioning. I don't want to call it a soft landing right now, but a lot of people are saying that housing is the economy in the United States. And when I see housing so strong, when I see the job market being the labor market, right? The job market being so tight, I cannot be so bearish on the United States economy.
Yeah, that's kind of the difference. That's kind of the difference now. But we will see how long it lasts. That's the thing. How was this? Was it trading in 2007? It would be interesting to look at. Would be very interesting to look at.
Let me remove the drawings. Yeah, look how old is it? Since 73.
Okay, what was it doing in 2007?
Was rallying.
Of course. Okay.
Okay, wait a second. So 2000. So it started already to drop. So 2005. This is when Burry was shorting.
Yeah, that was it. And then 2007, but it was going parabolic as well. But maybe more parabolic, I would say. Like that.
Yeah, it was more parabolic. It went from $3, it went to $49. So it's like.
But then look what happened.
20. Yes, it corrected almost back to where it started.
Wow, crazy. and then this. Yeah, now it's going parabolic as well. If you look at it. So interesting. Yeah, you would say if you put a reply bar, you would say, yeah, it's nice, it's going parabolic, right? If you just take 2007, go to 2007 and say, yeah, it's going parabolic.
So in 2005,
but you don't know where you are. Yeah, you don't know where you are right now. If it's that or it looks like it. It looks a tiny bit like it, but shows that maybe you have some more upside if you look at it that way, which is not really that correct, I would say.
The thing with it right now, right? So when I'm gonna put back my charts,
when did it all-time high? Well, didn't it all-time high? What was the date when this all-time high? Okay, so it was 2000. What was it? 2020.
2021.
Yeah.
And after that, it had an all-time high in August 2023. It had a pullback. This is where I shorted, and it closed with profit here. And now it did another all-time high. But what I'm saying is that yes, this is also parabolic if you think about it, because it did a 3x, 4x almost, right? So
is it similar or different? It looks more similar than different.
looks like this. Looks like this.
Yeah, it looks even parabolic now. What? Look at that. It looks even like it's sharper this time. Yeah,
but
interesting.
Would I short this? Would I short this? I would not short this.
No, of course. But another.
I would short this. I would short this like maybe under 70. So if we pull back like this, and we lose also this level from here, only under 70, I would short it.
Yeah, that's true.
Plus, we have this week. Some important PC. Data. We have not only the PC, we have the building permits from United States, and also the new home sales.
Oh yeah, actually it's tomorrow. Let me just share a little bit to show people where it is. Just give me a second. No, not this one, but just wait a little bit to find it. I think you can see it now. Yes. Yeah, building permits here tomorrow around 2:30 CAT. Here, what are you looking for this? You're looking to have forecast or under forecast to be bullish or bearish? What are you looking at?
If it's coming above, so if the forecast is 1.48 and it's coming above forecast, the stock market is gonna rip.
Okay, so if this will come, I don't know, 1.5 for example, or 1.49, it's bullish. If it goes below, then it's a very, very
but it also depends on how much below, right? So it depends also on the deltas.
Let's see a chart on this. It kind of topped, I think, July and August here, and then September, October, we're kind of coming back up a little bit, and I think will be an important reading here if this will go higher or the trend will continue like weakening here. But I think. But
look at the home builders. So home builders are can be the signal that this is gonna go higher.
Yeah. That is true because it's going parabolic. So probably this is gonna be good news. I agree with you.
And also on Friday we have the new home sales. Friday, if I remember correctly. Yes.
I don't have it here. Probably it's not that important because I have the.
No, it's medium. It's medium impact.
Yeah, it should be here. I guess you said Friday, right?
Yeah.
Durable goods, you said?
No, Friday, the last one after the Michigan consumer.
Oh, new home sales. This one's.
Yeah.
Yeah, new home sales. Yeah, as well. This is important. Yeah.
So if the new home sales also beats the expectation, it just reinforces that short term there are no actual problems. And another thing that I would really want to mention here, guys, is that nobody can predict with high accuracy when something is going to break, as you've seen. And also Powell said that a lot of analysts, a lot of economists, even people from Federal Reserve had the predictions that something is going to break and we're going to go into a recession in 2023. And this is the thing, that there are so many factors that you have to clock in. And if you think about it, after the COVID, a lot of bottlenecks from the transportation and from the logistics got solved. So when the economy is opened, a lot of those bottlenecks got solved and the economy is kind of entered back into a normality, but we had the inflation. So even if we're having this quantitative tightening right now, plus we have the quantitative tightening from United States, but we have in China and Japan which are introducing liquidity in the markets, and the Federal Reserve, they're doing some stealth quantitative easing through the BTFP and the discount window program. This helps the risk assets throughout 2023 to fare really well. So without something that we cannot forecast and we cannot model will start. So a black swan, that's why it's called the black swan, because nobody sees it coming. Until then, I really think that macro should be secondary, and okay, it should be in our mind just to keep us maybe a little bit more conservative. Let's just say that if in 2020 and 2021 we were aggressive because we had aggressive monetary printing from big central banks around the world, now we can still do allocations, but not as aggressive, because we are in a different part of the cycle, right? So we are not in the same part of the monetary cycle like we were in 2020, 2021, but still we're trending higher. So allocations are welcomed, but maybe just a little bit more conservative than in previous years.
Yeah, I think now the macro is secondary as well, but maybe it's gonna come back in 2024 at the end, or maybe 2025. We'll see when the lag it's gonna come to an end, because for now we're still there. We're still in the lag, maybe in the middle of the storm, but still in a lag. You know, in the middle of the storm is like quiet. It's nothing happening there. When you leave the middle of the storm is a problem. So it might take some time for that to happen. Might be 2025 or 2026. Who knows how long this will like actually take. So it's better to maybe consider exposure, of course, on your risk profile, because you need to know your risk profile at this point in time, and thinking in more in probabilities, I would say. Yeah, the core PC, what you're expecting for the core PC?
Let me double check also a bit.
Yeah, core PC here, I think it's, yeah, the forecast is 0.2 for the core PC month over month. That's how I see it here. So I think still, I think it's gonna come. Yeah.
Looking at the latest reading also from the CPIs in general and from the inflation basket, I think also core PC is gonna come in line. I don't expect a surprise to the upside right now.
Yeah, question is, are we going into deflation, or inflation is not really gone yet? As Jerome Powell said, we're not out of the woods.
If you look at oil prices, it looks like we're going to deflation.
Yeah, do you think so? Like prices of what? Good services, gas, or
oil,
we can maybe talk of oil. Yeah, if you have the chart, you can pull it up.
Yeah, 1 second. Just give me 1 second.
Guys, I think this was a very, very good live stream. So if you like it, just press the like button. You can find me and Mr. Spread on X. We're both there, very, very active. You have the links down below.
I think this is a very big downtrend. I wish I was much more aggressive with shorting. We shorted a lot actually in the last few weeks, and we can see from here this was a high, a low, lower high, lower low, and maybe this is going to be a lower high. I really wish that oil is going to break through this and reject from 78, because if I have some type of weakness or some type of rejection from 78, I'm going to short it a lot. I really think that oil is in a downtrend right now. It lost also the moving average to 100, which is also around 70, as you can see. So the boomer index, how I like to call it. And if I remove the drawings, and I have my personal favorite, which is Ichimoku. For me, Ichimoku shows a massive bearish trend, and these are just some corrections in this downtrend. As long as it's gonna stay under 78, for me, oil is bearish and has lower targets. So 65, maybe even lower. Let me look a little bit on weekly. Yeah, I don't believe in the current. This is just a relief rally, and maybe this is, I can call it a dead cat bounce. As long as it stays under 78 or 80 area, I'm gonna short oil, and I'm bearish oil with targets around 64, 65, maybe even lower. But for now, I think that oil is in a big downtrend.
Yeah, I think as well. But I think a bounce is there, similar to the DXY. I think the DXY might be in for a bounce if you have the DXY as well.
I will open it in just 1 second.
Yeah, I think both of them. But yeah, you pointed out pretty well that it's in a downtrend. I think we talked about I think oil had a very good support, probably around 84, 82, 84. And once it broke that, like, yeah, it's really nothing to look at bullish for the chart. How about
Also,
the
this is
yeah.
the DXY. This is the DXY, and the same thing with DXY. It's in a bearish trend. I was bearish under 100. Actually, I was neutral under 104.5, and I was bearish under 103.7. And it has this structure of a high, low, lower, high, lower, low, lower, high, lower, low, lower, low again here. And maybe here is going to be another lower high. So as long as we're going to stay under 103.7, even if we have this bounce, which I doubt it, to be honest, but we can have this bounce this week maybe, or
We might.
yes, we might in the next few days, depending on the data which we have it. But like I was mentioning, I think that the XY is very, very bearish, and I will use this kind of bounces to long euro dollar, to long GBP USD, mainly because of, look, let's take euro dollar. Euro dollar for me is super bullish, and it has on daily a nice bullish structure. Pound it was bearish until here, but after it reclaimed 124.3 and 127 area, this is bullish. USD JPY, this was a trade which I had, which closed in break even. Let me remove it from here so we can watch it more clearly. Look what happened. It topped around this area. It couldn't break above 152, and I think that now we entered a very nice bearish trend. USD CAD, I think it's just a matter of time. I would say that even this week we can touch the 132.3 area. So maybe in 2 weeks.
That looks bearish. Yeah.
This is very, very bearish. Lost also the moving average to 100, and this is a very, very bearish scenario, right? So if I look closely at this, I think that 132.3 is the next area. USD CHF is also bearish, and this is a weekly chart, by the way. Looks very similar with the USD CAD. So all of them here, euro, pound, JPY, the Canadian dollar, and the Swiss franc, make up of about 96% out of the DXY basket. So if I look at the DXY, even if we see maybe a retracement on euro dollar, so to retrace and have these values touched, and the pound to touch 124.3, I would use these pullbacks to long on the bounces, meaning to short the XY when it's going to come towards this area. For me, this would be a nice discount price where I can enter again short on the dollar.
Yeah, I agree. I agree. Looks bearish. We need to print about 103.64 at least in order for me to change my mind on this. And if you remember, let me just you don't have to cancel your share screen. I'm just gonna add mine. You can just skip it there. I can add it later. And let me add this TLT. If you remember the TLT, the scenario that I had for TLT, touching this area here, and then maybe having like some kind of a pullback here to 91, 92, or maybe even here in this range. So yeah, we touch almost 100 here, which was a very, very nice target. But I think from here we might see a pullback from 100 to 102 most likely in this range here for TLT, and then do like some kind of a confirmation of this bottom here. There was one very, very good. If we go on the 4-hour, we can see that we had a very, very high selling pressure, and then the buyers came in here very aggressively on this one. Does this look like a bottom? It does, but has no confirmation yet. So for a confirmation, it needs to print 102 maybe in this area, and then confirm it with like some kind of a pullback in this range here, and then go higher from here to, I don't know, 120, or maybe in this range. Do you look at TLT?
Of course I look at TLT. Remember, I had the inverse chart of TLT. I have an inverse chart of TLT, which is very interesting because
I can add it. If you find it. Yeah,
I have it here. So the only thing that you have to do is when you watch the iShares 20+ years Treasury bond ETF, because this is what is the TLT, you can flip it by pressing Alt+I from India, and you can search DXY, and it's going to give you a very interesting correlation. So as long as TLT inversed is dropping, Also TLT has the same, also DXY has the same direction, and this correlation is very, very strong, especially since I would say all the way back here. So since December 2022, this correlation was very relevant. But look at this areas, this was super, super correlated. So the inverse TLT, if you flip the chart with the DXY, so as long as TLT goes lower, I also think that DXY has a lot of room to go.
Yeah, I agree. I think you don't think that TLT might have like a resistance 100 and
yes, 102. It's also resistance on my chart. I also have it around the same area. So for me, also TLT around. I think mine is around 102.8. So just a little bit shy above your resistance, or somewhere around this. Because for me, this was a fake out, but. Even now, around 99 is the first big resistance for TLT, and maybe we can see some correction. That's why I said that we can see DXY a bit higher, because you see this is inverted. So maybe we can see DXY higher, a small correction on TLT, and maybe that. And even now, pre-market, it's TLT is down.
Yeah, how is the stock market pre-market? I think it's up, right? Yeah, 0.37. I look at the SPY. So
I'm not surprised.
We're kind of printing. We're kind of printing right now on going towards the all-time high. So it's like hard for me to be very bearish on Bitcoin in that scenario. Maybe even 37 is not feasible if the stock market would not like dip 1 to 2%.
I agree.
So yeah, I think still strong, but we'll see at the open. A lot of things can change till like tonight at the close. So we'll see open and then the close, which might be.
I think we're gonna see the all-time high today, if not tomorrow.
Yeah, you think tomorrow? Yeah,
the
tomorrow
way
might be.
is very strong, man. Like this trend is very strong. It's very strong. I mean, I'm just looking at it, and this is a super strong trend, especially after it broke above this area. It took out also this area from here. As you can see, it was a major high. I mean, people are calling for tops on the stock market, but again, I'm gonna mention Max from because he said something very smart, and he reminded me of something very smart. Guys, you have to remember that tops don't form like this. Tops form for like 2-3 weeks, and after that, we're gonna have a top. Like we had in this
Maybe
area. It took a little bit of time until this top formed, and we had to lose some lower levels, we have to lose some structures. So people, since last week, they started calling tops on S&P 500, tops on Bitcoin. But it's like, why would you go against the big trend? Why would you put yourself in front of price action when it's like such a bullish trend? That's why I say, like, I don't know if it's today, but I think this week. So I'm a little bit also more conservative, because in the beginning I said today or tomorrow we're going to see an all-time high. But a lot of people are shorting, a lot of people are sidelined, and I think the new FOMO is going to happen above new all-time high.
Yeah, I tend to agree. I think this might be the week actually for seeing that for the S&P 500 and maybe Nasdaq. I think Nasdaq even looks like better. Yeah,
look at this bull flag, man. Like, come on. Like, I think if I measure it, I can measure it from. It's gonna give me the target. It's gonna give me the target which I had with that inverse cup and handle. Now it's a bit lower. So what's the target here of this bull flag? It's around 19k and something. Let's see what is the projected potential target. It's around 19,348. I'll just leave it here just for good measure.
Yeah, I think a target in that range might be in a couple of months if we sustain the all-time high for Nasdaq. But yeah, Nasdaq very bullish, very bullish at this point in time. And I think if S&P does not do all-time high, I think Nasdaq will.
But I think it's already all-time high for Nasdaq since
I think it's on the linear chart. I think it's not really all-time high. I think for Nasdaq on the
this is today. This is today for Nasdaq. I don't like to call about this. Nasdaq, this is today for Nasdaq.
Yeah, today we're gonna see headlines.
They'll push it. But you see, this is the thing. It's like we're like inches away from all-time high on Nasdaq. We're like in touching this like 1.9% on all-time high from S&P 500. Dow Jones already has an all-time high. Had an all-time high since last week. If you see here, right? And we are talking about so bearish scenarios when it comes to other risk assets like Bitcoin, etc., right?
Oh,
I mean,
no, I'm not talking for bearish scenario.
not you. I'm saying in general.
Yeah.
When I say we are talking, I'm saying people on Twitter are bearish, and we're talking about recessions and what might happen. Yes, they can happen, but what if until this happens, I don't know, Dow Jones hits 40K, Nasdaq is almost 20K, S&P 500 goes to 5,300, and after that we drop. And until then.
And another thing, when the S&P 500 and Nasdaq goes to all-time high, usually Bitcoin follows. So
100%. So let's do something. So let's show something to the people who are here and also to the people who are going to watch the show after. It's quite correlated, guys. Okay.
Yeah.
Even if this is lagging. Yes, it has a lag. Exactly. It has a lag.
It's lagging. Yeah, it's lagging. But I think the best scenario for Bitcoin, like people who are not in, is for Bitcoin to be in the top scenario, pull back, and then all-time high. You know, like 100%. I think that would be, I think that would be the best scenario at this point, because probably all-time high will follow at some point for BTC in the next probably year, maybe earlier, but I don't want to see it before halving. So, because then I don't know how sustainable it's gonna be. So
you're afraid of that scenario?
And I'm not afraid. It's just how the markets really, when they go parabolic, they have blow off tops, and then and then people like get scared and sell off earlier, and then we cause a bear market again. So that's how usually goes into crypto. So I want to see it more like stable this time, like maybe similar what we saw in 2019-20, something like that, a bit more like sideways first before the parabolic run.
Before we end it, and I think it's going to be a nice place to end it, I just want to mention Russell, which had an amazing rally lately, right? So it rallied about 22% since middle of October, but now reached an important resistance around 119 area. So in order for us to see, because you can see from here when we broke under, we had a rejection, second, third rejection. Now, what it can happen, you don't want to see Russell going like this. In order for this to be sustained across the board, we also need to see Russell going higher to 211 and start going much higher from here. But right now, the oxygen is taken out by big companies from S&P, Dow Jones, and Nasdaq.
Yeah, Russell looks like Chainlink and Wyckoff accumulation scenario, but it needs to like Chainlink before it broke out.
When it broke out above 7. When it broke out above
8, I think $8 for Chainlink. Yeah, so
but I would not share this. I would not share this here.
Yeah, no, I'm not sure either. It looks like some kind of Wyckoff accumulation now with a spring, and then maybe a breakout. But yeah, we need to see. It seems like an accumulation phase. And of course, if S&P is doing all-time high, and like the German stock market is doing all-time high, and so on, so like I would not really short much right now.
Another thing that I want to add is that I was bearish on the banking system until recently, but for example, I was bearish in both BKX, which is the big banks United States index, and the KRE, which are the regional banks United States, and I had some very nice targets, and both of those targets were hit both on BKX and KRE recently. So since October, they started rallying, and this was one of the biggest problems in the United States, the banks and the regional banks. And as you can see, this is another reason why I cannot be bearish anymore, at least not on short term, or at least until I don't see something changing here. This was one of my biggest theses, and it actually dropped. I was following it since 90, and it dropped until 71. So quite a hefty drop for the big banks index in the United States, so more than 21%. Since July until October. But from October, this just started rallying, and they just rallied like crazy. So until I don't see some signs of weakness or some signs of going lower on the big bank index and also on the KRE, I cannot be bearish on United States. This was among my only not among my only, but among my biggest bearish thesis, that the banking sector in the United States is suffering. But in the last few, I would say 4 to 6 weeks, also they are rallying. So this is more fuel to the fire on the DXY, on the risk assets rallies. all in all, when you see S&P 500 rallying, Dow Jones rallying, Nasdaq rallying, and also the banking system, KRE, home builders, and also the Russell, which are the small caps in the United States, and the DXY we just talked about is trending lower. Short to medium term, I think we are in a bullish scenario.
Yeah, I agree. Short to medium term might be going there. But I saw something interesting. Let me just share for a second. Let me see. I think, this. Yeah, you've seen this. Mark Zuckerberg is building one of the biggest homes in US history, 270 million. And he's building like a bunker here. And all the conspiracy theories are like, why is he building that bunker? It's just interesting to mention. I don't know if you
I don't want to comment on the billionaires' crazy ideas, and I don't know.
Yeah, I don't know, because he kind of seems like the type of guy who doesn't really do kind of stuff like this, you know.
But let me tell you one thing: if he's building something like that and something happens for what he's preparing, it does not matter what we're investing anymore.
Oh yeah, correct. The internet is gonna go bonanza though.
Yeah.
If something will happen and he's gonna be in his bunker or something, I don't know.
Nah.
It's
at that point in time, God forbid, you should have fresh water and potatoes and some farmland, and that's it. But I don't want to think about that. I really hope that our leaders are smarter than that, and we're not gonna pass through that. That's why I have piece of land, I have forest, I have farm animals.
And shitcoins, and shitcoins,
and shitcoins, yes.
Yeah, look here, the shitcoins are pumping. Well, some of them are going down today. You can see Astar here is like going up. Osmosis is like, this is built on Cosmos, is going down. ICP, even ICP. So this is another red flag. ICPs went up, like went parabolic basically.
Yeah, I saw it from 5 to 11 or something.
Yeah, crazy, but the junk kind of runs last. So it's True. Another red flag there. Injective is keep going, doing his thing, like it's not over yet.
By the way, last week I added my first altcoin position on Algorand, and this week on this pullback this morning I added on Injective. So I think that Injective is going to be one of my biggest allocations in this bull run.
Oh, look at that. Mobile showed up out of the sudden.
Yeah,
something with helium or something. Something with helium. I don't know. Something like that. Astar had a 200% increase in 5 minutes.
Wow.
Yeah, it's shitcoin season, I guess, and it's not over yet. If you look at the dominance, it's kind of not really that healthy in the past, I don't know, month or something. So we might see some continuation for a couple of weeks of the altcoin rally. Let's see who's gonna be the winner this time. We have, of course, Injective Tia, who was a winner. Now is kind of pulling back. Let's see if it goes below 10. I might get into a position in that one.
I'm also looking at, but for me, Injective is the market leader, and I really want to have a big allocation before the bull run really starts.
Yeah, Ace trading at $14. A lot of people made a lot of money from the airdrop.
I saw it.
Incredible. A lot of people.
Today was listed on Bitget and MEXC. So
and Binance was the first one, I think. So that's why. I think a lot of people were expecting $1, and it did like this. Crazy stuff. I also farmed some. So I farmed, I don't know, a couple of $1,000 or worth of BNB, and I got at this price. I think I have $200 out of, like, I don't know, nothing basically, like just That's farming Ace. Yeah, crazy. Only in crypto.
I want to add one thing before we're going, because a lot of people are chasing some other things that didn't rally, and one of the biggest strategies that I will have this bull run is that I will do allocations on market leaders, especially from the narratives which I'm following, like gaming, AI, real world assets, decentralized science, etc. So that's why this is one of the reasons why, although Injective is near the all-time high, and some people will say that I'm crazy for adding here my first position, I really think that Injective has still a potential of at least 10 to maybe 15x from here. And I think we should be very comfortable in buying higher. Mercury said this, a trader which I'm following. He said something very smart. He said that in a bull run, you should get comfortable in buying higher.
Yeah, I agree. I agree. If you know something well and you were waiting for it to break a specific level, why not? Now it's in an uptrend. Why not? If you plan to hold it for a while. So
True.
Yeah, I think this was a very, very good episode.
I agree. We covered a lot of things from the traditional markets. We covered oil. We covered a lot of things.
Yeah, kind of everything, I would say. I don't know if we missed something. Maybe
I have something, but maybe we leave it for the next week.
Yeah, I think so.
I think it's good to leave it for next week. It's copper, and globally it's known as Dr. Copper because he gives the health for the financial markets and also for the global economy. And copper also broke out of about an important level. So if copper is also doing good and going higher, and we don't see under some important levels, and it's called Dr. Copper for a reason, I think at least short term we are still okay.
Yeah, and I think BRC 20 might be on our list.
Yes, I agree. I agree.
This might be interesting, something there. And of course, the next episode might be in 2023. So
2024.
2024. Exactly, 2024. Because next Monday is Christmas. So we want to wish everyone Merry Christmas, Happy New Year, of course, because we're not going to meet probably till 1st of January, or maybe, I don't know. We'll see, because the next Monday is 1st of January, but we can do it on a Wednesday as well, or Thursday maybe.
True.
Yeah. So yeah, happy New Year, Merry Christmas, and the markets are green. Let's see how stable they will be in 2024. It will be interesting to see.
Thank you, everyone, and Merry Christmas, Happy New Year, and I really hope that the New Year brings you health and a lot of amazing things. We want to thank you for another great year. It was not easy, but I want to congratulate everybody who is here. I think that we've been through a lot of pain together, and everybody who is still here and has a plan and had some allocations. But even if you didn't have some allocations, I still think that the best is still in front of us. So congratulations, and I really want to thank Daniel for all the great work he's doing in the communities and for having this Monday kickoff together. So Merry Christmas to you, partner. Have a wonderful time with your family.
Merry Christmas, Mr. Spread. Thank you the same. Take some time off. Probably I will as well. So we're gonna come back with fresh strength for 2024. Yeah. Okay.
See you in 1 year, brother. Take care.
Bye. Bye.